Well, g'day and welcome back to another episode of the StoneX Australian Cattle and Beef Market Report. My name is Ripley Atkinson. I'm the Australian Meats and Livestock Manager for StoneX based in Sydney, where we're developing price risk management tools for the Australian livestock industry to help the sector manage market and price volatility with our Australian feeder cattle forward contract. We're brought to you by StoneX Group, a Nasdaq listed global financial services network with 100 years of experience in global commodity markets. Remember that the trading of derivatives, such as futures, options, and over-the-counter products or swaps, may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. Well, we're back this week for another one. Today, I'm going to jump into the April wave of MLA's Beef Producer Intention Survey. It's a really valuable report released. Full waves are released in April and November, and a sense check's released in July. It's a really valuable report and piece of data that I keep quite a close eye on. So for those of you that haven't come across it, as a bit of background, typically the big surveys, they survey more than 3,000 beef producers each wave, grass-fed producers of differing scales and sizes right across each state and territory in the country. The April one that we're going to discuss today, it was released about 10 days ago. It looks at herd numbers at a category level, intentions of producers around their herd size, whether they maintain, increase or decrease, numbers around sales and where sales are sitting seasonally compared to the forecast they made from November and how that's performing. And then also what I find quite interesting and valuable at a topical level is producers can nominate different factors that are influencing their outlook on the sector. And obviously, because it's all based on the timing of that, it's really interesting to see. And I believe sense check and prove sometimes when there's anecdotal evidence of certain things affecting how the market is feeling. This survey actually solidifies that if you can see what they've nominated from a perspective of what's influencing their outlook. I would encourage you to jump onto MLA's website under their trends and analysis page and have a read, or just a skim and a look over the report if you haven't already. It's a fantastic resource and a piece of data, and I think it's really valuable for people to become familiar with it from what it offers and what we can take away from it. Today, I'm going to cover sort of 3 to 4 key themes that I took away from the report. First one being producers' sentiment and where that's sitting at the minute. And then, of course, as I mentioned, factors influencing that sentiment and their outlook around the sector. The second thing is where the herd is at a category level, both by a national macro perspective and then also at a regional level, so splitting northern and southern Australian production systems. There's a few sort of takeaways from the adjustment in numbers, which either be that seasonally or structurally, I think are really important to acknowledge and highlight. The figures provide some really interesting insight into what's actually happening on the ground from the producers at the minute. And then finally, how sales are performing and the number of cattle sold relative to expectations by producers in November. And just a few sort of unique, individualized observations I've made out of the report, which I think are worth acknowledging at sort of a number of different levels. But I'll start with factors that are influencing decisions. And from a sentiment perspective at a macro level nationally, sentiment's unchanged year on year. So it's reasonably positive, the most positive it's been since the survey began. But under sort of lying that is these producers can nominate different factors that impact either in a positive or negative way their outlook on the sector. Due to the timing of this survey, which was conducted or sort of out in the marketplace in April, it's really clear to see the influence of the conflict in the Middle East and the influence that had on generally more negative connotations and outlooks for beef producers. And that mainly was focused around global and geopolitical instability, and then also, of course, higher input prices across fuel and fertilizer. It's really clear to see that producers nominated those factors and acknowledged them as something that was dampening their outlook on the sector. And then you couple that with dry and drought conditions, which a number of obviously respondents were experiencing at the time. There was this really high concentration of these sort of three to four key aspects, be that either a weather forecast or the actual weather experienced at the time, and then the Middle Eastern conflict influencing instability, be that geopolitically or globally, and things like market access. And when you combine them, a really large number of producers select multitudes of those factors in their response, which basically had combined to give them a negative outlook. And I think obviously if you conducted the survey today, with rain in a number of those regions over the last 6 weeks, and of course the mentions of the conflict subsiding in the media, you'd probably have a very different outlook in terms of the aspects affecting negativity. And I think that's important to acknowledge that due to the timing of the survey, this was very topical and prominent. But we've seen those things change quite quickly. So the sentiment aspect would, I believe, be quite different if the survey was conducted today. But I suppose my point is it does actually show you that global factors well outside of Australia are followed by producers generally, and it does have a role to play in their outlook and attitude towards the future from factors that are completely outside of our control, particularly those global geopolitical situations. Moving on to the adjustments and changes in the herd. So the report breaks herd numbers down at a category level for the adult herd. So that's the total figure, breeding cows, heifers, steers under 2 years old, castrated males over 2, and bulls. Within that, you can then obviously look at southern and northern production region splits as well. And from a either seasonal or structural perspective, there's a few things happening here at the minute which I think are important for the market to understand. And then basically from that, what we can consider around how that influence will play out into the future from a supply perspective. So the figures I'm noting today, they're all comparing the April 26 results against the April 25 results. At a national level, the herd grew by 6% or 1.7 million head. So that's growth which doesn't include calves, but clear to see pretty strong increase in numbers year on year. Breeding cow numbers, they rose by a touch over 8% or 1.12 million head. Steers less than 2 fell by 2% or 120,000 head, so they were roughly firm year on year. And the big one was bullocks older than 2 years of age. Those numbers grew by 39% or 560,000 head. When we break it down further to a regionality or production system level, I think you can get even more out of this. Both structurally, we're seeing the data prove what we believed was happening, but also some stuff that we haven't probably picked up, which the data clarifies as well. I'll begin with the south. The adult herd in southern Australia grew by 450,000 head or 3% year on year. Now, within that 450,000 head of growth, steers under 2 years of age accounted for 43% of that, just under half, about 200,000 head increase in steers under 2 years of age in the southern herd year on year. Now that, I think, tells us two things. The first one is it supports that anecdotal evidence that people have been monitoring, the market's been sort of considering, and I've mentioned on this podcast, that southern producers would enter into a restock mode before they entered into a rebuild mode. And when you consider the growth in the southern herd overall is nearly dominated at nearly 50% by castrated males that won't rebreed, it gives you a good indication that producers are looking to trade or restock their way back or restock their way out of drought. And I think another aspect which supports that is, a lot of these cattle were pulled out of northern regions, which were experiencing dry to drought conditions. Cattle were turned off early. And when you look at the numbers in the north, there was this reasonably strong decline in steers under 2 years of age on farm in northern Australia, declined about 8 to 9%. And then you look at the increase in growth in steers under 2 in the south and what they accounted for in growth of the southern herd overall year on year, it gives you a pretty clear indication that that mentality of trading or restocking is actually playing out in front of us. Cows and heifers, those numbers were pretty stable. They did grow slightly, but not that significantly. I think it's a good indication of that sort of retention style attitude from southern producers and a focus on a sort of trade or a restock rather than a rebuild. If we did see the southerners focus quite intensely on rebuild, you'd see more breeding females and PDIC cattle and the likes purchased in, which would have inflated and pushed those breeding cow and heifer numbers a lot higher. That didn't happen or hasn't transpired in the data we're seeing here. So it does just give you a bit of an idea structurally how the southern producer is operating and their thoughts around decision making moving forwards as they move out of drought. The other really interesting one in the south is this structural shift. So it's not a more seasonal dynamic and a sort of short-term situation. This is a bigger picture. For the southern herd, bullocks over 2 years of age, numbers of those cattle on farm, they fell by 16.5% or nearly 80,000 head in 2 years. So comparing April 24 to April 26. I think it's a really good indication of this structural change we're seeing right across the sector, but clearly it's quite evident in the south, decline of nearly 17% in 2 years, of traditional bullock, grass-fed bullock producers moving away from that market to then target feeder cattle or the feeder market. The expansion, of course, in southern feedlots will, only add to that as more people discuss that in the marketplace. And I think in addition, the 24-25 2 years of drought for those regions would have probably exacerbated that even further, from a perspective of not wanting to continue to feed cattle. But the structural point there of that relatively steep decline, 17% in grass-fed bullock numbers down south, gives you a good indication of this structural change we're seeing towards the feeder sector playing out in just a couple of years. In the north, the adult herd grew by nearly 10% or 1.27 million head. So again, it's rising fairly strongly. The big one here and what accounted for that growth specifically was the cow numbers. So breeding cow numbers were up 17% or 988,000 head, so a touch under a million. Cows themselves accounted for nearly 80% of the growth in the northern herd year on year. So what does that tell you? That's clearly demonstrating that structurally expansion of the herd is still well and truly occurring in the north. It's still continuing to grow, and obviously the seasonal conditions experienced in that region over the 25-26 wet season will only continue to support that growth. Expect to see a very large calf crop delivered again this year on the back of that growth in the cow numbers. Heifers, on the other hand, they have grown. They lifted by 110,000 head in the north year on year, but that's a lot more moderate than the cow numbers. And what I think that tells you is we're seeing a lot more heifers retained and those numbers enter the breeding herd. So there would be a bit of the fact there in the north of producers accounting for stock losses from the floods, no doubt. In my perspective, I sort of read it as more a moderation in the number of heifers available, and it's more actually associated with those heifers being pushed in to join the actual mature breeding herd. As I mentioned at the start, at a national level, bullocks were the big story. The Northern Australian herd specifically is the real highlight here. So bullock numbers in the north rose nearly 510,000 head year on year. Clearly, as I mentioned a moment ago, the strength of the wet season in the north, this year's wet season, for many it's the best in recent memory, some of them the best ever. What that's showing is producers are choosing to retain these, typically what may have been feeder steers, and hold them through or grow them out to kill weights. And the season is driving and supporting that dynamic. That growth is really quite significant. And I think it gives you a good indication of the northern producers' attitude towards how the season is. And then when you tie that in operationally, they've chosen to nominate the fact that they're going to grow these cattle out to kill weights. As I mentioned a little bit earlier, supporting that, coupled with, I think, too, is the growth in the southern steer numbers. But steers under 2 years of age, those numbers fell by nearly 10% or 311,000 head year on year. So again, a bit like the heifers, I acknowledge that there would be producers accounting for stock losses of calves and younger, lighter cattle due to the floods. But I think a big part of that is really producers nominating the fact that they're going to withhold these cattle from sale and have grown them or are growing them out when this survey was conducted to grass-fed kill weights. When we consider what that really significant growth in the northern numbers of bullocks means for the sector. We're going to see, a fair few more grass-fed bullocks than we usually would in the second half of this year and into early next year when they reach saleable weights and are turned off. On the flip side of that, we could see a little shortness in traditional seasonal supply of your Queensland feeder cattle throughout parts of this year, which, the market might have usually expected because those producers have chosen to retain such a big number. 500,000 head growth year on year is substantial. And when we then think about how that might play out for, your feeder type, which are turned off at under 2 years of age, that's something to consider from a supply perspective. Another interesting one I found was that bull numbers in the north, they've fallen nearly 8% or 23,000 head. So it didn't sound like a lot, but when you think about bulls, serving 50 to 100 cows, generally, that's quite a significant number. But we've seen cow numbers in the north grow by nearly 1 million head year on year. So there's clearly a bit of a discrepancy here, which I think for the commercial producer is important to acknowledge and just be aware of. We're not seeing increases in bull numbers on farm match the rise in cow numbers. So when you think about bull selling season for spring and, the north in general sort of coming up or about to start, how do you access the numbers you need? Are there going to be the supply available to obviously meet this really large female breeding herd we've got in the north at the minute? More broadly, the retention of cows generally, and particularly in the north, means we're going to have big supply of sale cattle well into 2027. Cows that calve this year, they're not, the progeny of those cows, they're not going to be ready until mid next year at the earliest, if not maybe a little later, depending on the target market. And it means we're going to have big numbers of saleable cows available to be sold well into next year. Yeah, so there's some really interesting aspects to what this data tells you and more broadly what it means. Sort of following from that, at a supply perspective, the survey and its results around sales, I think, are quite interesting to monitor as well. And it's not necessarily the specific numbers themselves, but it's more the structural trend that I like to keep an eye on, particularly when you compare producers' outlooks on sales from November and then where they actually ended up or what their then adjusted forecasts are in April, sort of 5 to 6 months later. The big one here is producers nationally are expecting an additional 1.1 million head of cattle to sell in the 2026 financial year than what they originally thought what was going to take place in November. That's a pretty sharp uptick in the space of sort of 5 to 6 months. Obviously, there will be a part of that, certainly in sort of the Southern Australian system, cattle were sort of pulled forward to be sold early because of the dry conditions. But, if you're looking in the genuine north, sort of central Queensland north, that's not necessarily the case. But Northern Australia was the one which saw its biggest change, where more than half, so 57% of sales were due to occur in Q2, which is April to June, then compared to the first 6-month sort of tranche or period that was surveyed. I think it gives you a good indication that supply is expected from producers to be strong into the middle of this year. And I think if we consider the rain over the last sort of 6 to 8 weeks, that situation may be pushed back even further. And when you consider tax implications and sort of coming up to the end of the financial year, that's probably another factor to consider in terms of timing of sales, which will be important to keep an eye on. I think the next few months will really solidify that and actually show us what that sales timing looks like and where supply is genuinely at. I still hold the view we're going to see really strong numbers of cattle come out of the system, but the timing will be, dependent obviously on seasonality. But I think the point to make here is producers, they're recognizing sales numbers are going to be strong. And what subsequently that means is supply should be strong into the middle of this year and particularly the second half as well. I had a look at, just some other things which are not necessarily specific to any of the points I've mentioned today, but I believe they're worth acknowledging. Data in the report continues to indicate this move away in Southern Australia from autumn-only calving and more towards either a mixed autumn-spring system or spring only. And I think that's really important to acknowledge because in time, when those cattle start reaching weights, it will influence seasonality of supply in the south. On a state level, South Australia, clearly the dominant autumn calving herd in the country. 50% of its cow herd focuses on autumn calving only, and that's a fair bit higher than any of the other states. There's this gradual increase, as I mentioned, towards spring only calving herds as well. When you look at the data over the last couple of years, that is gradually playing out. And sort of on top of what I mentioned earlier, that will have implications for supply, and seasonality of supply in the South more broadly as that continues to unfold. I think another one which is important to be aware of, and it's probably not specific to a southern or northern system specifically, but is this shift away a little bit from breeding, and more producers are acknowledging or prioritizing and positioning their businesses to focus on trading or incorporating a bigger share of trading cattle. So something to just be cognizant of. It's likely that if you were able to, you'd break it down. You'd see the big guys with their breeding herds are getting bigger, and those somewhere in the middle are choosing to incorporate more trading or going to trading completely. And anecdotally, from my conversations with producers across the country in both northern and southern systems, that incorporation of trading or a complete switch to trading is very much in play. The final one, probably not unsurprising considering the year many had last year, turn-off weights in the north were substantially heavier than the results producers provided in the 2025 figures. So again, year on year, turn-off weights well up. That's all for today's episode. This is a really valuable report and a really valuable piece of data. I'd encourage people to read it and get familiar with it because it provides some really detailed quality information that's worth understanding at a sort of macro level. And for the producers listening, I would encourage you to participate and get involved when you receive an email from the surveyors of this report. I think the more producers involved contributing to this, the better. Ultimately, it's going to give better data for the sector to look at, review like I'm doing at the minute, and then transform that into an insight and information that you can then use to make decisions. But if today's episode has raised any questions, feel free to reach out and send me an email to ripley.atkinson@stonex.com or record a voice note of yourself, where you're from and the question, and we'll get to answering it in the next episode. Feel free to share this with any of your mates or people you think might be interested in it. It's important we're able to share this sort of information with as many as possible. So yeah, feel free to pass it on. But if you are enjoying it yourselves, either follow it or review it on your listening platform. Other than that, thank you for listening. And until next time, take care. Cheers.